Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for an earnings update here on the 2nd of February in 2021. Just a few seconds ago, wish I would have hit that record button 2 seconds earlier. The Amazon share price after earnings is up, but that's the expected move, at least on the spread, near-term front month straddle, and that's about 2,032. Just a few moments ago, that is exactly where the Google shares have traded. So we'll talk about Google in tonight's update. We'll go into Amazon and talk about some of the lesser known names. I say lesser known as in, we know ConocoPhillips and Pfizer and Emerson and UPS, ExxonMobil and the like, but I think for tomorrow's trading session into Wednesday, the big talk of the town outside of GameStop is going to be Google and Amazon. So let's start there. The expected move, at least on the earnings play, is again the front month straddle takes it about 113, and the next month straddle is about 138. These are the TheoTrade auto-generated earnings-based expected move levels, and it just puts the straddle logic into a price. Oh, there it just went. So what's the logic? What's the plan? What's the probabilities? What is your position if you are already in a position, and what do you do maybe on Wednesday's session? Generally speaking, we can expect the market to hit or tag, more than not, one of the earnings-based expected moves. In this case, looks like it might be the upside. And the logic there is just spreads or option positions or big plays, and how the volatility in the option market being very efficient tags sometimes that earnings-based expected move to the penny. And this is what Don discusses many, many times and can build butterfly trades or other type of spreads. The other way to look at it is when the market, if you are not positioned and you are an intraday trader, the expected move type of logic can be a target and turning point. Meaning, if Google shares, Alphabet shares opens up into or near this, that can be considered a pivot point to trade short against, at least from a probability short-term scalp type of trade for intraday logic. That it hits the expected move, positions are closed, hedges take place, and shares rotate lower. If it's above the expected move, then that tends to be a breakout, but those will tend to be lower probability events. Right now, we're just looking at Google with the earnings, and the numbers on it just quickly, they beat. So you can, I'll show how to get inside the tool, but in the thinkorswim platform. But on the numbers, top level numbers, the Wall Street earnings estimate came in at $15.90. But apparently their actual earnings today was $22.30. And that is a beat, and the street, the traders, like it. And they're bidding up the stock. So how does one get into the fundamental tab for Google or other companies? It's on the Analyze tab under Earnings. This way you can take a look at what has happened in the past, implied and historical volatility trends on the short term, and what the at-the-money straddle was before and directly after the earnings announcement. It does look similar, but there's little changes each time. And the yellow line tells when the actual, in this case, beat, if they beat the street estimate, consensus estimate, that will mean the yellow is above the green. But if the green is above the yellow, that means that the stock did not beat. It underperformed the estimates. We know that right now Google did, and it has a recent short-term trend, the last 3 earnings, that is, of beating the estimate. And again, if you want to go inside a little deeper and take a look at fundamentals, you have to type in the stock. But for those of you who want to play a little longer-term durations or do positions that are outside short-term 2, 3, 4 week positions, this might be helpful for you if you are interested. And it just talks about the exact fundamentals, and of course you can look at the news to read the earnings report. And that is Alphabet, Google. Amazon is the other one, and at the moment there's not much of a change. Not right now. This can certainly change, and the evening and before the market opens on February 3rd, which is Wednesday. So the earnings for Amazon, where were they? They beat as well. The Wall Street estimate was $7.05. They reported $15, and actually that's a big revenue beat. there's other aspects in the earnings report. And if you are really, really curious about what the numbers are on a deeper basis, pull up the news. And there's other news if you're curious about Amazon. It's that Jeff Bezos is stepping into executive chair. He is focusing on other projects. So Jeff Bezos says it's optimal time for CEO transition. So that's probably a big story that may get more attention than the earnings. So Jeff Bezos is shifting roles in the company. What about the earnings? The expected move, straddle logic, takes it to about 3,606 or down to 3153. Where is it now? Roughly where it closed. And that is about 3,400 in terms of the Amazon share price. So that's where we are just as we have the video shortly after the market close. Now, again, you'll know more than I do as you listen to the video or listen to it perhaps on Wednesday morning. You'll know what the pre-market activity is and what type of parameters that Amazon is trading in. Is it up to the top of the expected move, down to the bottom of the earnings-based expected move, or is it simply continuing this sideways kind of a box, right? I have little trend lines for trades, but a sideways box. And again, that sideways box for Amazon shares takes it roughly between 3,400, which is where it is, and about 3,100. Companies coming up with earnings will include, now AMZN did have earnings, but I think it's getting overshadowed quite a bit by Amazon and Alphabet. But it also is unchanged. For information purposes, the beat was, they were expected at about $3.36, and the beat was $3.81, but the stock is unchanged. Coming up tomorrow before the market opens, Biogen, AbbVie Labs. After the market closes, PayPal. Also, and we can take a look at it this way, actually. There's PayPal. This is after the market closes. Allstate Insurance, or Allstate Corporation, MetLife, and then Qualcomm. After that is Bristol Myers Squibb and others. So we still are in earnings play. If you are playing off butterflies or swing type of trades, or maybe even selling premium beyond these expected move targets, there's the target that updated for AMZN. And that's about 253, 254, and 227 on the way down. At the moment, we are at 240. So structure trades if need be before the earnings with butterflies or spread type of logic. My preference is to trade intraday or watch how the stocks interact, if they interact, with those intraday expected move targets that could play a short sell type of maneuver down to it. And on the target, if there are buy signals or just playing off the expected move, that can be a logical framework for intraday reversals, or in this case, longs off the expected move or shorts off the top. And if AMZN or other stocks don't trade into the expected move, then there would not be a trade opportunity with that logic, as might be the case with Google. The market's entered a volatile period where there's multiple gaps. Gaps can be common, but this is a period of January into February where the trend has been up, but the gaps and a lot of activity is occurring overnight. We have had 4 trend days in a row, at least in the S&P. The Nasdaq is shy of all-time highs, at just under 13,600. The Dow Mini Futures, 31,000 is its pivot, and the Russell is between this 2,100 and 2,200. Much more to talk about, but financials are strong and other stocks in play. But this week probably is all about earnings, and I would be remiss if I didn't talk about GameStop and at least show the chart. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for February 2nd, 2021.